back to another video, guys. Alright, so market structure, trading, all that stuff, Wyckoff methodology. So that was my anime, ignore that. So let's get right back into it after you just ignored that. Anyway, okay, so the first thing we're gonna do is we're gonna go on full screen and we're gonna look at UJ. Alright? The first thing I do when I'm trading Wyckoff is understanding that Wyckoff is market cycle, right? When the market's going up, we have markup, schematic, coiling up, impulse, which is that markup, consolidation, markup, and then we have that distribution, right? Read distro, and then that's how the market cycle works when you're trading Wyckoff. We have accumulation, then reaccumulation. I didn't draw accumulation here, but accumulation looks like this. Accumulation, reaccumulation, markup, reaccumulation, markup, reaccumulation, right? And that's what basically happened here. The blue circles represent market structure, which we had, and I noticed down here at the bottom towards the low of market structure, right down here, we actually had reaccumulation, right? And it wasn't accumulation, because accumulation is what? Down, schematic, up. This was up, schematic, up. So this isn't accumulation, this is reaccumulation. So that's basically what I found. And as you can see, those white labels are all the labeled events of that actual schematic. Some people don't do this, but I specifically do this. I only trade different this is specifically, I think, type 1 reaccumulation. There's other type reaccumulations. I specifically trade only a certain type. But yeah, so I had my take profit, which was the second, which was this high here, which is liquidity, which is either going to be your nets high, double bottoms, double tops. That's what I usually will use as my take profit. And then I have my imbalance gap here, my demand zone / trading range, accumulation entry, reaccumulation. Then we went up, and my trade, my profit, this represents markup, right? Because we have consolidation, markup, consolidation, as we saw right here in that graph that I drew before. And this is the markup, so this means what? This is the consolidation. And that's actually why I have this actually labeled here, because I'm expecting another move downward here and a movement here, right? Tapping to that reaccumulation before going up again. And if you notice, a lot of times when you get your trading entries, when you're trading Wyckoff, there will really be wicks. So a lot of times most of the time I don't see price action like hang out in my entry. It's usually a just tap and go. So meaning tap and go, meaning like there's usually a candle, and there's usually a wick sticking out that always is tapping into my entry. And that's usually that lets you know you're trading on the right side of the market, because usually those entries will be precise like that. So if it's a bearish candle, it will look like that, and that will be my entry, and that's usually how it will look when I'm trading. But yeah, guys, this is a reaccumulation. I'm actually planning on trading this pretty soon this week. I have to look at the economic calendar and see what's actually moving, either USD or JPY. USD is on Tuesday, and JPY is actually tomorrow. So that's a reason why it's on my active pairs for my watch list right here. So I'm looking at seeing if I can trade this tomorrow, because we have some medium volume news happening for UJ. I use another site to look at UJ news. So this site tells me we have some medium impact news for UJ today at 7:50 p.m. Oh yeah, today 7:50 p.m. So I'm expecting to actually trade this when the market opens. Now this movement could simply be a movement of the market just going down towards this entry. It doesn't necessarily mean the market's going to go up, but I think it's going to go down and go up, and then that trade will happen then. And it's actually a small trade. It's not a big trade like the one back down here. This one's a slightly smaller one. And this is the trade I'm planning on entering. And I also have, of course, gold here, my market structure. Whenever you see those blue circles, that represents market structure. That's what I mean when I'm drawing it. It always represents market structure. So, yeah, that's pretty much what I do. I hope you guys found this little mini video helpful. recently just started to make these little mini videos to help people get straight to the point and not make them too long, so you just can like have bite-sized pieces of information. So the first step to finding Wyckoff schematics is usually going to involve doing this. You're going to look and identify your market structure by circling all the highs and lows, at least 4 or 5, and then let's say, oh, I'm bullish, so that means that if you're bullish, you're going to look for demand zones towards the low, and now those could be multiple zones, it could be one zone, and those demand zones, specifically for me, I trade gaps. So yeah, it's the same thing bearish. I trade gaps, order blocks. When it's bullish, I trade the bullish gaps and bullish order blocks. When it's bearish, I trade the bearish gaps and bearish order blocks. And the only reason I find trades is I'm good at market structure, and it took me time to actually get a grip on it, but it's actually pretty easy. When you're trading UJ, here's a tip for Forex traders. If you're trading UJ, start on the 5-minute, because the UJ moves slower because it's an Asian pair. It moves during a like Tokyo session, so it's a slower pair. But yeah, guys, I hope this video was helpful, and peace.